Welcome to the Luxembourg Fundcast. We're taking a deep dive today into something absolutely fundamental to how finance operates here. The full legal opinion. These aren't just pieces of paper. They are really critical instruments for navigating risk and making complex transactions happen in Luxembourg's sophisticated financial environment.
Absolutely. And it's quite remarkable, isn't it? While Luxembourg doesn't actually have a single law specifically called the legal opinion law, their importance is just so deeply embedded in market practice.
Right.
And it's not just tradition either. Regulatory developments are increasingly, formalizing their necessity. A prime example being the markets and crypto assets regulation, MiCAR, which I know we'll get into. Think of them almost as the legal compass guiding these really significant financial undertakings.
Exactly. A compass. I like that. So our mission today is to really unpack the world of these full legal opinions in Luxembourg's financing and banking law. We're going to explore their purpose, the why behind them, then who the key players are, the who involved, and of course what these documents actually contain, the detailed what, plus the necessary groundwork, the how of issuing them, and also some of the practical considerations like negotiation and costs. Finally, we'll touch on recent legal and regulatory shifts, maybe the where of current developments that are shaping how they're used.
Sounds like a good plan. So let's start right at the beginning. What exactly is a full legal opinion in the Luxembourg context?
Well, at its core, it's a formal written statement. It comes from a lawyer or a law firm qualified in Luxembourg law. And it expresses their professional understanding, their conclusions on specific legal points. These points could relate to a particular transaction, maybe a set of documents, or specific circumstances. And it's always based on a detailed review of documentation and quite often subject to certain stated assumptions. Okay, so it's definitely more formal than just, say, chatting with your lawyer about something. How is it different from general legal advice?
That's a key distinction. While both obviously rely on legal expertise, a legal opinion is far more structured, much more comprehensive. It directly addresses specific, clearly defined legal questions. And very often, it acts as what we call a condition precedent.
Ah, the CP.
Exactly. A hurdle that absolutely must be cleared before major financial deals can close. And the term full implies that the opinion covers a broad spectrum of key legal aspects relevant to the deal and any Luxembourg entities involved. It's not just focused on one narrow legal point.
Right, that clarifies it. So why are they so essential? You mentioned risk and facilitating deals, but what are the core reasons they play such a vital role?
Well, there's several fundamental reasons. First and foremost, I'd say legal certainty. These opinions provide assurance to all the parties involved, lenders, investors, counterparties, assurance about the legal standing of the companies, the validity and enforceability of the agreements, the proper creation of security interests.
It's like the legal foundation for the deal.
Precisely. Think of it as the bedrock. Without this assurance, the whole structure could be shaky. That's the kind of weight these opinions carry. Second, there's risk mitigation. By identifying potential legal risks up front, the opinions allow parties to assess them, manage them effectively. For example, just confirming a borrower is properly incorporated and has the power to sign the loan docs that directly cuts down a lender's risk.
So establishing that firm legal ground and flagging potential pitfalls, what else?
Third is transaction facilitation. Honestly, in many significant financing deals, you simply cannot proceed without satisfactory legal opinions. They're very frequently a condition for releasing funds or closing the entire transaction. Their presence just gives everyone the necessary legal comfort to move forward with confidence.
Okay, and the last one.
And finally, regulatory compliance. In certain specific areas, providing a legal opinion is actually explicitly mandated by regulations to fulfill legal obligations.
Right, you mentioned a couple of examples earlier. Could you just remind us of those instances where an opinion is specifically required by law or regulation?
Certainly. Article 63 of that Grand Ducal regulation from 2016, the one concerning insurance undertakings, it specifically requires a legal opinion or something similar to confirm that cross-border insurance activities comply with the host country's laws.
Okay, insurance.
And then, as we touched on, bunker. The markets and crypto assets regulation. It mandates legal opinions for asset reference tokens, or RTs, specifically to determine their regulatory classification. What's interesting, though, is how the need for an opinion and how comprehensive it needs to be tends to scale up. It depends on the transaction's complexity, the amount of money involved, the level of regulatory oversight, and crucially, how many different countries are involved.
So maybe a straightforward domestic loan might not need this level of deep legal scrutiny, but a complex international deal maybe involving crypto assets or multiple jurisdictions almost certainly would.
Exactly. Simpler, purely domestic transactions with lower financial stakes might skate by without a full legal opinion. But the moment you're dealing with international players, or intricate security packages, or regulated products like these MyCar arts, or just substantial financial exposure, well, the inherent legal risks and uncertainties jump significantly. Legal opinions become the primary tool to address and mitigate those heightened risks. Even just at the EU level, the complexity that comes with cross-border elements really underscores their value.
That makes sense. Now, to give us a clearer picture of the legal backdrop, you mentioned some key regulations influence these opinions. Could we maybe highlight the most important ones?
Absolutely. Foundational, really, is the Loi du temps août 1991 sur la profession d'avocat. That's a law in the legal profession. It sets out the fundamental duties for lawyers: independence, diligence, truthfulness, confidentiality. These principles are the absolute bedrock for the reliability of any legal opinion they issue.
The basic professional standards.
Exactly. Then we have MyCar, Regulation EU 2023-1114, along with the related CSSF Circular 258/9090. That circular applies the ESMA guidelines, JC 2024-28. And this is particularly significant because it actually mandates specific content, a prescribed format. There's even a template, and it specifies the qualifications of those who can issue these opinions for RTs regarding their classification. ESMA really spelled that out.
Wow. Okay. So MyCar is setting a very precise standard for opinions in the crypto space. What other key laws or regs should we keep in mind?
Well, in insurance, as we said, Article 63 of the Règlement du Commissariat aux Assurances N degree 1603 requires that opinion confirming compliance with host country law for cross-border activities. Then there's the prospectus regulation framework implemented in Luxembourg by the Loi du 16 juillet 2019. While it doesn't always mandate a separate legal opinion per se, it's indirectly very relevant. Prospectuses contain crucial legal disclosures, and the accuracy of those relies heavily on the underlying legal advice.
Right. The lawyers ensure the prospectus is legally sound.
Precisely. And looking ahead, there's Projet de Loi 8425. That's the draft law on dematerialized securities in DLT. It's expected to bring in new rules for DLT securities and this concept of an agent to control. That will definitely shape legal opinions in that area. Think about opinions on title transfer, security perfection for these digital assets.
So new tech means new opinion needs.
Absolutely. And finally, while opinions don't usually give a direct thumbs up on AML compliance under the Loi modifiée du 12 November 2004, the underlying due diligence lawyers do, like verifying a company's corporate status, certainly intersects with those AML obligations.
Okay, that gives a good overview of the legal framework. Now, you also mentioned typical scenarios where a full legal opinion becomes necessary. What are some common triggers?
You'll almost always see them in secured and unsecured lending. They cover everything from the borrower's capacity to sign, the validity of the loan agreement itself, and crucially, how security interests are created and perfected under Luxembourg law. They're also standard in capital markets transactions, bond issues, for example, often supporting things like the issuer's incorporation and its legal power to issue the bonds, supplementing what's in the prospectus.
Okay, lending in capital markets.
Then securitization transactions. Opinions here are critical for confirming that the special purpose vehicle, the SPV, is legally separate from the originator, what they call bankruptcy remoteness, and that the assets were truly transferred. Also, mergers and acquisitions that involve financing. You'll definitely see opinions covering the financing agreements in those deals.
Makes sense.
The establishment and operation of regulated entities or products, like we discussed with MyCar Arts, or getting a banking license, often requires them. And finally, pretty much any significant cross-border transaction where Luxembourg law governs key aspects, or where Luxembourg companies are involved, an opinion is almost always a prerequisite there.
So a wide range of triggers. Now let's talk about the who. Who are the key actors in this whole process? Who's creating them? Who's using them?
Several important players. First, obviously, the issuers. These are the Luxembourg qualified lawyers, the avocats à la cour, working in Luxembourg law firms. They're the ones actually preparing and signing the opinions. Their professional duties, as we mentioned, are defined in that 1991 law on the legal profession.
And what are some of the core duties from that law that really underpin the reliability, the integrity of these opinions?
Well, independence is crucial, Article 1. It ensures objectivity. Then Article 332 lays out the duty of truthfulness and diligence. That's fundamental to the reliability of anything they state in the opinion. They also have a strict obligation to avoid conflicts of interest. That's Article 334, which safeguards their impartiality. Professional secrecy, Article 35, is vital given the sensitive, confidential documents they review during due diligence.
Right, they see everything.
Pretty much. And Article 36 covers the setting of fees, which applies to opinion work just like any other legal service. Now, while the 1991 law doesn't detail specific standards just for legal opinions, these general professional duties form the ethical and legal foundation. Any negligence in issuing an opinion could certainly lead to professional liability.
Makes perfect sense. So those are the issuers. Who are the parties on the receiving end? The ones relying on these opinions?
We usually call them the requesters and addressees. And this is a broad group. It includes lenders, banks, credit funds. Investors may be in bonds or investment funds. The arrangers who put the deals together, like loan syndications or bond issues. Often the issuers of securities are the borrowers themselves. They frequently engage their own counsel to provide the opinion for the benefit of the other parties. And importantly, regulatory bodies like the CSSF or the CAA. They might require opinions in specific regulated contexts to ensure compliance. All these parties rely on the opinion to make informed decisions, do their due diligence, manage risk, and meet regulatory requirements.
You also mentioned earlier that in some regulated areas like crypto under McCarr, there are actually specific qualifications now for who can issue these opinions. Can you expand on those stricter requirements?
Yes, and this is a really significant development. The ESMA guidelines, applied by that CSSF Circular 25890 for RT opinions. They specify that the opinion issuer can be either an in-house lawyer or an external law firm. But crucially, they must be able to issue the opinion objectively and be free from any unmanageable conflicts of interest. That's explicit.
Objectivity and independence are key.
Absolutely. And furthermore, there must be demonstrable evidence of their professional competence to actually issue such opinions. This can be shown through relevant diplomas, practicing certificates, or registration with the bar, for instance. This really signals a move by regulators wanting explicit assurance about competence and independence, especially in what they see as higher risk areas like crypto.
So it's going beyond just being a lawyer admitted to the bar.
Exactly. While bar admission is the baseline, having demonstrable expertise in the specific area like crypto regulation becomes implicitly necessary for these specialized opinions. It goes beyond the general duties in the 1991 law. And this trend, it could foreshadow similar, more specific qualification requirements popping up in other evolving financial sectors down the line.
Interesting. So expertise matters more and more. Now let's dive into the document itself. What does a full legal opinion typically look like? What are the essential bits?
Well, a reliable opinion always starts with thorough preparation, and that means getting hold of a lot of documentation. The lawyers issuing the opinion will meticulously list every single document they've reviewed, and the opinion's scope is expressly limited just to those documents. If information is incomplete or inaccurate, it can seriously impair the opinion, or it forces the lawyers to make very broad assumptions, which might make the opinion less useful.
Okay, so the documents reviewed list is critical. What kind of documents are we typically talking about?
You're looking at a range of things. First, corporate documents for any Luxembourg entities involved. That means they're up-to-date coordinated articles, statutes coordinates, recent official excerpts from the Trade and Companies Register, RCS, and the Beneficial Owners Register, RBE. And it's worth flagging here, the law of 23 January 2025 updated rules around these registers, so lawyers need the absolute latest info.
Right, keep current.
Also, corporate resolutions authorizing the specific transaction, and certificates of incumbency confirming who the current directors and officers are. Then the transaction documents themselves. Final, executed versions of financing and security agreements, loans, guarantees, pledges, assignments, intercreditor agreements, bond terms, prospectuses, offering circulars.
The deal docs.
Exactly. And finally, a category of searches and other info, things like litigation and insolvency searches, maybe information memorandum, business plan, term sheet. For MyCar, the crypto asset white paper is key, and lawyers very often ask for officer certificates. These confirm factual stuff they can't easily check independently, like confirming the company's solvent, or that there are no conflicting agreements it's already signed.
Wow, that sounds like a mountain of paperwork. Once they've digested all that, how is the opinion itself usually structured? What are the standard sections?
A typical full opinion will start by clearly identifying the addressee, who gets to rely on it, and the date it's issued. Very important. Then, usually a scope or introduction section, giving a brief overview of the deal and why the opinion is being given. An absolutely critical section is documents reviewed, listing precisely every document examined.
We covered that the foundation.
Exactly. Following that are the assumptions. These are statements of fact or law the lawyers assume are true without checking themselves. Then come the qualifications or limitations. These are crucial. They set the boundaries. For example, stating enforceability is subject to insolvency laws or court discretion on equitable remedies. They manage expectations.
The caveats.
Precisely. The real meat is in the operative opinion clauses. This is where the lawyers state their actual legal conclusions on the specific questions asked. And finally, there's usually a concluding statement, often repeating who can rely on it and which law governs the opinion itself.
You said the operative clauses are the heart of it. Can you give us a flavor of what these cover? What areas of Luxembourg law?
Sure. For instance, an opinion on corporate status and existence confirms the company is properly incorporated and still legally exists, based on RCS records and its own articles. An opinion on corporate power and authority confirms the company has the legal capacity and has taken the right internal steps, like board approvals under company law and its articles, to actually do the deal.
Can it legally do this?
Exactly. Due execution confirms the documents were properly signed by authorized people, relying on those executed docs, resolutions, incumbency certificates. An opinion on valid and binding obligations confirms the agreements are legally valid under Luxembourg contract law. Enforceability goes a bit further, stating those obligations can be enforced in Luxembourg courts, though this is nearly always subject to those qualifications we mentioned.
Right, the insolvency carve-out, etc.
Correct. You'll also commonly see clauses confirming no conflict with laws or constitutional documents, or no conflict with other specific agreements, often based on that officer's certificate, and clauses outlining any necessary filings and consents required under Luxembourg law.
What about security?
Yes. In secured deals, specific opinions on perfection of security interests are key. Under the financial collateral law, maybe the civil code, and now potentially considering Projet de loi 8425 or DLT security, clauses on governing law and jurisdiction, non-immunity if a state entity is involved, choice of law for foreign law docs, and the enforcement of foreign judgments are also pretty standard, each drawing on established Luxembourg and EU legal principles.
That really paints a picture of the legal ground covered. You also stress that in regulated areas like MyCar, the content requirements are much more specific. Can you elaborate on what MyCar demands?
Absolutely. For those MyCar Art legal opinions, it's not just about using a standard finance template. Regulation, EU 2023-1114 itself, plus those ESA's guidelines, JC 2024-28 and the CSSF, Circular 215890, lay down very specific requirements. The main goal is to clearly analyze why the crypto asset is an art, and just as importantly, why it's not something else excluded from MyCar, like an e-money token or another type of crypto asset not covered by Title III.
So it's about precise classification.
Exactly. And the ESA's guidelines actually provide a detailed template in Annex B. It dictates the structure and minimum content. It covers everything. General info on the offer, details about the art itself, and a thorough legal analysis against the MyCar definitions and exclusions. The opinion has to reach a clear, substantiating conclusion on the classification and list all documents reviewed.
And this goes to the regulator.
Yes. This legal opinion is a mandatory piece that goes with the white paper to the CSSF for the notification or authorization process for arts. This level of standardization is quite a big step for regulatory oversight in crypto, really quite different from the more bespoke opinions you see in traditional finance.
A much more structured, prescriptive approach for crypto. What about other regulated spots? Insurance undertakings came up earlier.
Yes. For insurers doing cross-border business, Article 63 of that Règlement du Commissariat aux Assurances mandates, they give the CAA, the insurance regulator, a legal opinion or similar proof. It has to confirm their proposed cross-border activities fully comply with the laws and regulations of the host country where they plan to operate.
Okay. Let's shift focus slightly now to jurisdiction. Where do these opinions typically focus their legal lens?
Well, opinions issued under Luxembourg law primarily concentrate on, unsurprisingly, Luxembourg law, specifically as it applies to Luxembourg-domiciled entities, agreements governed by Luxembourg law, and the creation and enforcement of security under Luxembourg law.
Makes sense.
But it's absolutely crucial to recognize the huge interaction with and influence of European Union law. A massive chunk of Luxembourg's financial law actually comes from EU directives and regulations. MyCar, the prospectus regulation, the CRD/CRR banking rules. So Luxembourg legal opinions often implicitly or sometimes explicitly consider the relevant, implemented, or directly applicable EU law. And the guidelines from the European supervisory authorities, the ESAs, like those for MiCAR, are also highly relevant. National regulators like the CSSF and market participants here are expected to follow them.
And in big cross-border deals, how do Luxembourg opinions fit in with opinions from other countries?
Right, in cross-border transactions, the Luxembourg law opinion is usually just one piece of a bigger puzzle. You'll typically get a suite of opinions from the different relevant jurisdictions. For example, imagine a loan agreement governed by English law, but the borrower is a Luxembourg company, and the security is over shares in another Luxembourg company. In that case, you'd typically need both an English law opinion on the loan agreement and a Luxembourg law opinion covering the borrower's capacity, the security perfection, and maybe other Luxembourg legal points. Conflict of laws issues can pop up. While the Lux opinion focuses on Lux law, it might touch upon whether Luxembourg courts would recognize the English governing law clause or enforce an English court judgment, but usually with specific assumptions and qualifications attached.
Could you give us a concrete example, maybe, to illustrate these cross-border aspects?
Sure, let's think about reverse solicitation under MiCA. That's covered in CSSF Circular 25887, applying ESMA guidelines. It's about when third-country crypto firms are considered to be actively soliciting EU clients. The reverse solicitation exemption, where an EU client approaches the firm entirely on their own initiative, is quite narrow.
So firms outside the EU need to be careful.
Very careful. If a third-country crypto asset service provider, a CASP, deals with clients in Luxembourg, they need to figure out if their activities count as active solicitation. If they do, they likely need a MiCAR license in the EU. So they might seek legal advice, maybe even a formal opinion, analyzing their marketing, their website, their onboarding process against those ESMA guidelines. Are they actively targeting Lux clients, or can they genuinely rely on the client approaching them first?
I see.
And remember that Article 63 for insurance, requiring an opinion on host country law. That also illustrates the point. A Luxembourg firm opines on Luxembourg law,
Sure.
but the contract's governed by French law, or assets are in Germany, or activity happens in Italy. You'll need lawyers qualified in those jurisdictions to give the relevant opinion on those laws.
Right, the opinion follows the relevant law and location. Okay, so we've dug into the why and the what. Let's move to the how, the actual process of getting one of these opinions issued.
Okay, the process. It really hinges on thorough due diligence by the lawyers issuing the opinion, the opining counsel. This means that comprehensive document review we talked about earlier. It also involves detailed verification of corporate information, checking against official records from the Luxembourg Trade and Companies Register, the RCSL, which is managed by the LBR, Luxembourg Business Registers, and the Register of Beneficial Owners, the RBE. And again, that law of 23 January 2025 is important here, as it amended rules for these registers, expanded the entities covered, changed some info requirements. Lawyers must ensure their DD process uses the absolute latest, legally recognized info.
Staying up to date is key.
Crucial. The due diligence also involves detailed legal research, lots of discussion with the client to really understand the transaction and its context. And good law firms have internal quality controls, maybe a second partner review or review by a dedicated opinion committee.
So it's a rigorous internal process, too. What about relying on certificates from the client or public info?
Yes. Opining counsel often rely on officers' certificates from the client. These confirm factual matters they can't independently verify, like solvency, no conflicting deals, genuineness of signatures, maybe. The legal opinion will typically state clearly that the lawyers relied on these certificates without checking them independently.
Okay.
They also rely heavily on publicly available information from official registers like RCSL and RBE. That's how they confirm a company's incorporation, its existence, legal form, address, who its legal reps and beneficial owners are. And again, that 2025 law impacts this, changing the scope and detail of info available and maybe the process for getting certified excerpts. Lawyers just have to stay on top of those changes.
Right. So can you walk us through the typical steps from getting the instruction to delivering the final opinion?
Sure. It usually starts with the initial instruction from the client. Scope is defined, agreed upon. Then the client provides all the necessary documentation, transaction docs, corporate docs, etc.
A mountain of paper.
That's the one. The law firm then dives into its due diligence and review of all that, plus the relevant law. Once the DDD is done, they start drafting the opinion. Now, often, especially in complex deals, there's a negotiation phase. The draft opinion gets discussed with the addressees, their lawyers, wording gets tweaked.
Back and forth on the details.
Exactly. After the main transaction documents are finalized and everyone's happy with the opinion wording, the law firm will finalize and formally issue the legal opinion. And this issuance very often happens right on the closing date. It's frequently a key condition precedent. The deal can close until the opinion is delivered.
Okay, so it's often right down to the wire. Let's get into some of the practicalities then. You mentioned negotiation. How does that typically work? And what about costs and timelines?
Right, negotiations. They happen mainly because the different parties can have slightly different aims. The addressees, lenders, investors, they generally want the broadest possible comfort from the opinion, maximum assurance. The law firm issuing it, however, needs to ensure accuracy and, frankly, limit its own potential liability appropriately. So it's about careful wording and defining scope.
A balancing act. Risk allocation, really.
Precisely, it's risk allocation. The key players in the negotiation are usually the lawyers, the opining firm's counsel, and the addressee's counsel. Sometimes, if there's a really significant commercial point wrapped up in the legal wording, the business principals might get involved too.
And how does it happen? Emails, calls.
Usually an exchange of drafts with tracked changes or written comments, often followed by conference calls to hammer out sticking points, sometimes face-to-face meetings for really complex ones, common negotiation points, the exact scope, the reasonableness of assumptions, the wording of qualifications and limitations, getting those just right, nuances in the operative clauses, and who exactly gets to rely on the opinion and for what. It's important to stress there are no specific laws or CSSF circulars dictating how to negotiate. It's all based on established market practice, professional judgment, and the specifics of that particular deal.
Okay, and costs. Why can these opinions sometimes seem quite expensive?
Well, it reflects the fact that it's a highly specialized professional service involving significant work. Think about the extensive due diligence, the detailed document review, the legal research needed, the careful drafting, potentially lengthy negotiations.
A lot of lawyer hours.
A lot of highly skilled lawyer hours, yes. Typically, the borrower or the issuer foots the bill for their own counsel's opinion. And often, they also have to cover the reasonable legal fees of the lenders or investors' lawyers for reviewing and negotiating the opinion, plus any separate opinions the lenders might require from their own counsel.
So the borrower issuer often pays for multiple sets of lawyers looking at opinions.
That's common, yes. The specific cost is agreed between the opining firm and its client in the engagement letter. Factors influencing the price, transaction complexity, number of Lux entities, volume of documents, how novel or tricky the legal questions are, urgency, lawyer seniority, how much negotiation is needed. It all plays a part. Yeah. That 1991 law has general principles on fees, but no specifics for opinions. Ultimately, the cost reflects the value delivered mitigating risk, providing certainty, enabling the deal. For big, complex transactions, it's seen as a necessary and worthwhile investment.
Right. The cost of not having one could be much higher. And finally, timelines. Why do they vary so much? Who influences how long it takes?
Timelines can really vary quite a bit. Depends on complexity, the legal issues, number of parties and documents, how quickly everyone responds, how long negotiations take, urgency.
Lots of variables.
Exactly. The client influences it by providing documents and instructions promptly. The opining firm influences it through its efficiency. The addressees and their counsel influence it by how quickly they review and comment during negotiation. Good project management by the legal teams, coordinated with the overall deal managers, is key to hitting deadlines. Things that affect duration. Getting registry excerpts back, research time, negotiation length, coordinating with lawyers in other countries on cross-border deals. Again, no official rules prescribe timelines. It's driven by practicalities and commercial needs. But since delivering the opinion is often a condition precedent for closing, it's frequently on the critical path. It has to be ready for the closing date.
Okay, that covers the practical side well. Now, the legal and regulatory scene in Luxembourg is always moving. What are some recent or upcoming developments that people need to be aware of regarding legal opinions?
Yeah, this is crucial. The ground is definitely shifting, and firms and clients need to stay alert. MyCar is obviously a huge one. We've mentioned CSSF Circular 205-890, applying the ESA guidelines for ART opinions, mandating content format issuer qualifications. Those ART-T and EMT rules kicked in from June 30, 2024.
Right, MyCar is live for stablecoins.
Exactly. Then there's CSSF Circular 25887 on reverse solicitation under MiCA, super relevant for third country firms, and Circular 25886 on qualifying crypto as financial instruments fundamental for getting the regulatory treatment right. Circular 25889 covers systems and security for offers. MyCar's impact is broad.
So lots happening in crypto regulation affecting opinions. What else is on the horizon?
Well, Projet de Loi 8425 on DLT and dematerialized securities, that aims to modernize Lux law for blockchain, potentially introducing that agent to control. That will definitely require new or adapted opinion clauses for DLT assets covering things like title, security perfection on the ledger, the agent's role.
The blockchain law.
You could call it that, yes. Then Projet de Loi 8427, implementing the final Basel III CRD6 banking reforms that could indirectly impact opinions on banks' capacity or regulatory capital eligibility.
More banking rules.
Always. And finally, that law of 23 January 2025 amending the RCSL and RBE laws that directly impacts the due diligence process for opinions relying on register info for corporate status, reps, beneficial owners. Lawyers have to adapt their checks.
So, a lot of moving parts for lawyers drafting these opinions. And these developments must directly impact the transaction documents themselves, right?
Absolutely. They feed directly into what needs to be documented. MyCar means specific content in crypto white papers, maybe new clauses in service agreements with CSPs reflecting MyCar duties, updated client terms. That DLT Projet de Loi 8425, once enacted, will likely mean updates to terms for DLT securities define the DLT, the agent's role, transfer rules. Security agreements over DLT assets will need careful thought about control and perfection. Custody agreements, too.
Makes sense.
And the 2025 law on registers. That probably leads to reviewing and updating representations and warranties in finance docs about corporate status and UBOs. Maybe changes to CPs about delivering RCS-RBE excerpts or ongoing covenants about filings. So the key documents affected are things like loan agreements, security agreements, guarantees, prospectuses, intercreditor agreements, corporate authorizations, crypto white papers, fund docs, terms of securities, and of course the legal opinions themselves need constant updating.
And the opinion process itself probably helps improve the documents.
Oh, definitely. It often acts as a crucial quality control check. Lawyers reviewing everything to issue an opinion will often flag inconsistencies or potential issues in the main transaction documents. This leads to clarifications, maybe amendments, which ultimately makes the whole deal legally more robust.
Right, tightens everything up. So, to bring our deep dive towards a close, what are your key concluding insights on the role and significance of full legal opinions here in Luxembourg?
Well, first, I'd reiterate they are just indispensable for legal certainty and risk mitigation in Luxembourg's sophisticated financial market. You really can't do major deals without them. Second, preparing them demands a really high degree of diligence, specialist expertise, and that crucial professional independence from Luxembourg lawyers.
High standards required.
Absolutely. Third, the legal and regulatory framework is clearly dynamic. MiCAR, upcoming DLT rules, banking reforms, register changes. It requires constant vigilance and adaptation from lawyers and also from the people relying on the opinions. So ultimately, a meticulously crafted, thoroughly researched legal opinion remains absolutely vital for successfully navigating complex financial transactions in the Grand Duchy.
Excellent insights. Thank you so much for walking us through this really critical, complex area of Luxembourg finance.
My pleasure. It was good to discuss it.
Disclaimer. Please remember that this content is generated or significantly edited using artificial intelligence tools and is intended for general informational purposes only, reflecting knowledge available up to the time of publication. It should not be construed as financial, investment, or legal advice. We strongly recommend that you independently verify the information presented and consult with qualified professionals for advice tailored to your specific circumstances. If you found this deep dive insightful, please do hit the like button and subscribe to the Luxembourg Fundcast for more expert analysis. This has been the Luxembourg Fundcast for you today.